The sole aim of a trader is to make profits and preserve capital. My name is Derry. Welcome back to this channel. If you're new to this channel, kindly subscribe and stick with me to the end of this video as I show you how to have your risk management on lock and always be on the winning side in the long run. So in this video, I'm going to be sharing with you 3 risk management tools that once combined together will increase your profitability and also preserve your capital. Number 1, the stop loss tool. The stop loss is simply an order the trader gives to a broker to close out a trade in loss when the trade crosses that particular price, thereby cutting your loss short and preserving your capital used in trading. This tool just simply helps you exit a trade at your desired and calculated risk. So here are 2 tips for setting your SL. Number 1, give your trade space to breathe. A lot of traders want that 2 pip stop loss, 5 pip stop loss, but the fact is that not all trading opportunities is going to present itself with that sniper entry. So it's okay to have normal drawdown. Give your trade space to breathe. So it's okay to have normal drawdown as long as in the long run you're getting in on all your trades and you're not getting out prematurely. Number 2, have a particular approach for setting your SL. You can't just do this based on feeling. It must either be on the currency you're trading, the pips, or in relation to the market structure. But the main key point is that have a particular reason and let it not just be on feeling. Number 2, lot size or position size. This is just simply the amount of currency units you trade on a single position. There are different types of lot size. You have the micro lot size, the mini lot size, and the standard lot size. So if you go to our previous video on how to use MetaTrader, you can see what the lot size is all about and how to use it to open a trade. So here's a tip on how to set your lot size. So for instance, you have a $10,000 trading capital and you want to raise 1% of your account, which is $100. Number 1 thing you need to know is your stop loss value in pips. Either it's 15 pip stop loss or 10 pip stop loss you're going with. In a case that you're going with 10 pip stop loss, on let's say Euro USD, you're going to be using 1.00, which is a standard lot size. So you can also check out our video we have posted earlier on how to calculate your lot size. And finally, the risk to reward ratio too. This concept is crucial for long-term profitability because in Forex you're risking X amount of money for ×2 of that risk or ×3 of that risk. And this is how you stay profitable irrespective of losing streaks or consistent losses. For instance, you're risking 1% of your account on a trade to get ×3 of that, which is 3% in return. And it's advisable that your strategy should have at least 1 to 3 risk to reward ratio for long-term profitability. So I'm going to be showing you on TradingView how to use the long position and the short position to calculate your risk to reward ratio and also set your stop loss order.
Okay guys, to pull out your risk to reward ratio tool, simply go to projections here. You see this Z sign, forecasting and measurement tools. Then we have our long for the buy and also our short for the sell. So this is a trade we took, and this is how to use your risk to reward ratio tool to actually know where your entry and your exit points is, your stop loss and your take profits. I've talked about the stop loss order. The take profit order is just the opposite. An order is set for your broker to close you out in profits. So let's say our entry was at this candle right here and we have a stop loss of 15 pips. You can see the pips I'm looking at. This is the stop loss pip level here. Stop 15 pips. So you can increase it to 28 to any level of your choice. And the same thing for your take profit, your upside. Let's say we have a 50 pip take profit. This 50 right here. So you can see currently this tool just simply calculate your risk to reward ratio for you. You can see this has a risk to reward ratio of 2.7. That means if you're risking 1, you're going to get 2.7 of whatever you're risking. So let's say we have a 3 risk to reward ratio. That means we are targeting 55 pips. This is now showing 3 risk to reward ratio. That means you're risking $10 on this 18 pips. You're going to get 30 when you reach 55. So this tool is very essential for long-term profitability, and we'll do it for the short sell. You go to short position, let's say we have right here now this trade, and our entry is on this level here. We are targeting 30 pips take profits. 30, and our stop loss is 15. So this will give us a 2 risk reward ratio because we are risking 15 to get 30. So with TradingView and this long and short position too, you can simply know your risk reward ratio and also your pips on a trade. And this is the highlighted price here. If I remove this long position, for the stop loss here, you can see it's highlighted. So you just simply take in your stop loss digits and input on your MetaTrader for your trade, and the same thing with your take profits, already highlighted here. So these two have already made it easy for you to calculate your risk reward ratio on a trade.
I hope this video was helpful, and now you know how to use these 3 risk management tools: the stop loss, the lot size, and the risk reward ratio, because 3 of them have to be on lock and have to be in line. You cannot have a 15 pip SL and be risking a lot size of 20 pips or 10 pips. It has to be in line with your desired risk on your capital. So when you understand these 3 tools, you're set to preserve capital and also thereby increasing your profitability. Thanks for watching this video. Don't forget to smash the like button, turn on post notification to get more contents like this.